Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to continue our coverage of this bloodbath on Bitcoin and many of these altcoins as the stock market continues to plunge down now that we've opened this Sunday night, at least temporarily. Some of the stock indices have opened up, and we can just see that Bitcoin is reacting pretty harshly. We do see some of the poo coins just continuing to fire off as they often do, just kind of pump and dumping while the rest of the market takes the hit square on the chin. And that often happens during these weird moments in crypto. On the chart, of course, you do see the stock market is just blood red. Guys, I'm a little bit under the weather today. I'm pretty sick, and of course, that means that I may be just jumbling some words, may have a little bit of some word salad. Of course, I haven't been putting out as many episodes as I usually do because for the last couple weeks my health has been declining, and in fact, this whole year has been pretty bad health-wise for me. So we'll continue to monitor that. But relative to this channel, or pardon me, related to this channel, more, we should just focus on the chart. So let's get to it with Bitcoin. Here you can see just my basic zones, our levels to look at. This is just how I do it. I know, some of my friends do horizontals in a little different way than I do, but this is how I like to visualize things. You can see that we've, basically tagged some of these daily and weekly levels up here. We temporarily had support on these daily levels, broke down, retouched it, basically sat on top of this weekly level. We're coming down through this zone to another weekly level, at least how I measure it. And so we're basically just cutting downwards. As you guys will recall, in the last episode, I tried to make the case to not go long here, and we had a huge spike up here, which many people thought was going to be the turnaround on the chart. But I was warning people that based upon our volatility, that it was most likely that we were going to continue to the downside. And as you can see, we do have just a continuation of that expansion to the downside. And now, as we're turning around, potentially this volatility may have flipped the other direction. And so we'll see if either we're going to continue to expand in the same direction or if we're actually going to contract to the downside as well. I'll be monitoring volatility. Of course, we should also just quickly check in with the Cme chart that was the 24/7 exchange. And yeah, here you can see on the Cme chart, it's a little bit more clear. You do see our volatility just continuing to expand upwards, right? So here's the volatility ribbon, here's its EMA. They're far apart from each other. So anyone saying this daily move is over, that's not correct. They're not correct in that assessment. The daily move is not over. The daily volatility is still expanding us to the downside, and so we're going to continue to watch that as Bitcoin just screams towards lows. And I'm going to flip back over to the 24/7 exchanges because the CME, that the professional exchanges that's closed on weekends and evenings, it does need time to kind of catch up and resync with the 24/7 exchanges. So, usually on Monday and Tuesday, all of that syncing gets back together, and that's why we often see reversal days on Wednesdays, just because, stocks and these kind of 24/7, exchanges, they get synced back up. But you do see a little bit of a bounce here, a little bit of temporary support being put in, just a little bit front running this type of a weekly level. And so we'll see if we can hold that. This is not a very significant area to hold. Not sure why the rest of my chart isn't popping up. There we go. This isn't a very significant, one, but you do see that we do have a little bit of a limitation here. So this could perhaps hold us up. This one right here, it's kind of the bottom of that area, and then I would suggest that we have a couple here. So I'm not sure exactly where this drop can take us. If we look just in the past, if we look just in the past over here, you do see this broad swath of movement just like through here, and you do see that this area right here, kind of you can see these candles, this candle, these candles, this kind of jump right here. This looks a bit like its own zone compared to the top of the chart here. You see the bottom of this candle, see the top of this candle, and then if we just fast forward, we also see that type of price movement here. You see some of the bottoms of the candles over here. You see them kind of, poking up right here. And so this is kind of its own zone. This is its own zone. And then there's kind of this mid like level between there. So we could potentially find support in this area the way that we found support here and the way that we found support at the bottom of it. Not sure if we're just going to go all the way through it. In these past most recent actions, we have just cut all the way through that zone to the bottom. And so if I was going to put my money anywhere, I would say, yeah, there's the potential for a little bit of a bounce in this area, right? You do see these candles and stuff. You do see this little wick right here. You see this little wick right here, this wick right here. The middle area is a little bit bouncy. You see the tops of these candles kind of getting cut off there. And so, yeah, of course, we could find a little bit of temporary support in this area around 19,300, 19,400-ish, or even just where we are. This is 19,600, 19,500-ish, just in this little area right here. Of course, these are zones. They're not just straight lines. This is price action, and it's a human beings trading. It's not just machines, right? So there's no specific number. And even if there was a specific number, the machines, if they were doing the calculations, they would front run each other, right? Because different people would calibrate their algorithms to buy before the other guy buys. And then it's like a prisoner's dilemma, right? Who buys first? Who sells last? It's a game of chicken, right? All of that stuff. And so that's why these numbers, they're never going to hit perfectly. You're always going to see little kind of zones. You're not really going to see lines. And so that's why it can be this thick, right? Especially as we're kind of pushing up on this kind of diagonal, then you are going to just see like different patterns start of support being put out. But as you can see in the last episode, I did suggest that this could be an area where we find support. I think I'm going to use these red and teal zones rather than these green boxes. It just looks nicer to my eyes. So let's just keep with this one. But just to remind you, I did suggest that we were going to continue to break down, was warning everyone, do not go long here. Just not financial advice, but I personally would not go long there. We did have just like a little bit of a daily support, but most likely we were going to cut through that like a hot knife through butter. And sure enough, that's what we've been doing. We've just been dropping and dropping and dropping. And so most likely we come to the bottom of this box at a minimum, retesting that kind of a 19,000. And if this is the push down, then we could even see that $16,000 area, which could be highly relevant depending on how you're interpreting macro. I will be putting out another Macro Monday video, and so be sure to catch that one. The next Macro Monday video is very, very important, guys. Okay, so please watch that one. Do not miss the next Macro Monday. It can just open your eyes to a whole new way of seeing the charts. Okay, that's going to be a very, very good episode, and please watch it from the beginning to the ending. It's very important. Let's see, what do we have here? Of course, we did have our bear patterns, just based upon, this type of bear flag right here. We could see not only some resistance at this, in this zone right up here. Oops, kind of moved my box. Not only some resistance in this area, but if we continue to push down, then we could perhaps get hung up on the 300 weekly MA. Let's go over to the weekly chart, throw on our good old EMAs. And look right there, right? You can see the 300 MA just popping up. And so if we did push down, I would suggest that we're probably going to get a bounce off of that 300 MA. That is a very psychologically strong moving average. You can basically make a moving average out of any number, but the 300 MA, just like the 200 MA, is a very strong psychological, moving average in terms of how professional stock traders look at markets, and usually they see the 300 MA as a clear bottom of a market. And so, guys, I just want to put this out there that anywhere, like any type of dip below the 300 MA, right? Not the 300 EMA, the 300 MA, any type of dip below the 300 MA is a very strong psychological number for the entire market to consider as a possible bottom. Now, I know that I've put scary numbers before you in the past, and yes, I do have areas marked out lower. All of these lines, all of these zones are relevant in my mind. If we just continue to drop, we could hit any number, any number of these different lines. We could cut through them and ultimately find bottom support at any of these levels, even as low as $1,800. I just do not think that's likely. I don't think this is likely. I don't think 5,000 is likely. These are very unlikely numbers. Now, when we get to 5,000 to 8,000, I do think in a very, very severe global financial crisis, like a real one, not what we're experiencing right now, but a real one, then we could perhaps see these numbers between $5,000 to $8,000. And then, if things just kind of go chill, but, the Federal Reserve increases our interest rates just tremendously, like they just smack us over the side of the head with another 75 basis points increase in rates, then probably we can see this kind of $9,000 to $14,000 zone. And hey, guys, if we're at the bottom of the market, oh, and by the way, that bear flag takes us to that 14,000 to $16,000 level. And guys, if we are at the bottom of the market and we're just going to get like some type of confirmation of the bottom of the market with stocks plunging, then maybe 16,000 to 14,000 is the bottom of the market. Maybe that's the wick below the 300 MA that just triggers everyone to think that it's the bottom of the market. We cannot be perma bears and we cannot be perma bulls, but just because the rest of the market, just because everybody, every guru, every pump and dump group, every YouTuber, every Twitter account is just saying that we're going to $10,000 to $11,000, it doesn't have to make it true, okay? Yes, that's within reach, right? That, like, I've marked off this area for a reason. I think this is probably the most likely zone that we hit, and yes, I do think $12,000 to $11,000 is probably the strongest zone of support within that range. And then I think that this psychological breakdown from the 300 MA is what's going to start triggering all of the professional traders to start saying, Bitcoin is starting to look really juicy. Bitcoin is looking really good, right? And so, as we break down from the 300 MA, should we get there at a kind of a double bottom with this 17,500 number, right? If we get kind of a double bottom or go a little bit lower, then I think buyers are going to start stepping in, and what we're going to see is a bullish divergence on the RSI, where basically, pardon me, whoops, wrong indicator. Where basically we get this kind of higher low structure on the RSI, but the price perhaps has a lower low, and that divergence, that bullish divergence, it's going to be like this blue one right here, right? This bullish divergence where the RSI has a higher low, but the price action had a lower low, that's going to be a bullish divergence on the Bitcoin chart on the weekly. And so that can possibly give us a nice bounce, right? So that's what I'm looking forward to. If it's possible to happen, I would love to see that happen. And that's why I think this 300 MA, or maybe this box, just in case there is another push down by the Federal Reserve, maybe this box, between 14,000 to 11,000, these are our two most likely spots in my mind to be bouncing during in the current conditions. And guys, global macroeconomic conditions are changing weekly these days, okay? They're changing monthly and they're definitely changing quarterly. So every day is like a new factor. There's so many things being juggled right now. There's liquidity issues that are being moved all around the world, where China one day is putting out $1 trillion of liquidity into the market. And then the next day, Europe is increasing interest rates, taking, billions and billions of dollars out of the market, and the US is increasing rates. And then at the same time, the Treasury is increasing liquidity. At the same time, there's like stimulus in the forms of forgiveness, loan forgiveness to students. Like all these things are going on in all these major countries, and it's just a war right now on the macro side. It's a war to see how much liquidity this market's actually going to have. How far can the dollar actually push up until something breaks, until something has to give, until a bottom has to be put in? And I just don't think that we're just going to fall forever. We're going to have to catch ourselves at some point. A consensus will be born. I do think this $14,000 to $11,000 is the most likely area, but I also want to just suggest that there is reason to believe that the market could respond to this 300 MA area. And in breaching those two, then of course, where I'm looking at is this 8,000 to $9,000 area, because we do have a, CME gap in that area, which I thought I had marked out, but maybe it's on just the CME chart. But anyway, we do have that type of an area where we have a CME gap. Let's go over to the CME chart just to confirm that. Let's see, moving down here, go to the daily. And turn off these EMAs. And then yes, we have a thin EMA structure right here, very, very thin, very narrow. I wouldn't call this one a gap. I do think that this one is filled in. Yes, it is. This wick filled it perfectly, but it is incredibly thin, okay? So first of all, that would be a nice area to test, that 11,200. And then let's just go from this wick down to this area. Yep, that's a real gap. That is a real CME gap, okay? At 9,870 to 9,750-ish, that is a real CME gap right there, where there's just no data. And the market tends to like to fill those CME gaps. Now, this one is filled, but it's very thin. Okay, it's not like a solid candle or anything. It's very thin. And so I'll just give this area as being very attractive as well. Okay, so if we do hit that 14,000 to 11,000 zone, price action may just push a little bit deeper to 11,000 just to try to wick, right? Just to try to fill in this area just a little bit, with a little bit more of a solid kind of a test that probably didn't get put in earlier on. And then there is this gap here, which if we could push lower, which would be a tremendous amount of effort. That would be, millions and millions and billions of dollars potentially to push us even lower. So not clear if that's really possible or not, but the market may try to go for that as well, right? And so that's why for me, if we do break those areas, that I would be open-minded to that $9,000 region. And sorry, TradingView is being a little bit slow today. There we go. And then, of course, anything below that, not really on my radar, guys. Let me just move one of these lines down here. I do like that $8,000 level. Yeah, this is just going to be the second layer. So basically, this area. I do like this area a lot for a lot of different reasons. We've got the bear flag. We've got the CME gap. We've got the Binance scam wick from back in last October. So there's a lot of stuff just going on down here, potentially. And then, of course, we have this psychological threshold at the 300 weekly MA over here around kind of a double bottom on the chart. Guys, not much more to update here. Just I hope you guys took my advice seriously in the last episode. I know a lot of the YouTubers were just super bullish. They just wanted everything to just bounce at the previous level, right? Like, oh, we're gonna just go up to whatever, right? But I was telling you guys, I just didn't feel it. And one of the reasons why I didn't feel it is that if you look at stocks, guys, how did they close on Friday? Right? Did you guys see that? Stocks closed on Friday just dropping, just plummeting to hell. Look at how engulfing candle, right? Just a bearish engulfing candle this was. And this was kind of my max limit. This was kind of a reasonable area to retest, and then I think that we're headed down into this zone, right? If not potentially lower. And there's a lot of stuff on my chart, but just because I'm looking at this stuff from a lot of different angles. But overall, we could put in a lower low. We could put in kind of a double bottom. We could put in a higher low. And we just don't know yet. We just don't know yet what it's going to be. If the market gets really, really bad, if like something catastrophic happens in the world, then yeah, I do think that we could get to these really lower lows. But typically, I mean, check out my Macro Monday video, okay, guys? Like, I go over it in that one. Check out the Macro Monday video. You're going to be delighted when you see that video. It's going to give you so much hope. It's going to give you just, you're going to get high on hopium when you see that video. So check out the next Macro Monday video. I'll be putting it out after this one. But let's just go back over to Bitcoin because you guys can see, right? You guys can see, like, this thing's probably coming down. This is a bit of a rising, I mean, this is a bit of a, expanding rising wedge. It could come down here, right? It could come down to these levels. No problem. There could be a double bottom on this chart. So, that's the NAS 100, but basically every stock index looks exactly the same. All these indices look exactly the same, index to index. And you could get a double bottom, you could get kind of a higher low, or you could just get kind of a bullish retracement. This one's kind of opposite here. That was meant to be like that. Actually, I'm not sure what this box was meant to represent. There we go. This is also the S&P, something like this, right? So we failed to hold into this box, right? You saw this kind of ultimate rejection just cut through this whole area as if it didn't even exist. That's the Jerome Powell effect, right? The Federal Reserve just scared the heck out of the market. We're getting hung up on these little levels, right? These little, just kind of little mid-channel levels right here. But I think ultimately we're going to find our support, either at 39.20, to maybe like 38.30. This is the most likely area for me. Of course, for Bitcoin and crypto, we could push even lower because when stock markets catch a cold, crypto gets the flu, right? So it's possible that we push, even lower than whatever the stock market is doing. So Bitcoin could make a lower low while the stock market makes a higher low, and that would just be an extra kind of divergence, actually, kind of an extra bullish divergence that could potentially pull crypto back up, assuming that the stock market does something like that. I'm not really at this point still of belief that we have to hit these ultra low levels. I think it is possible and that maybe that could be confirmed in a winter. But check out my views on the Macro Monday video coming up because that'll tell you a little bit more about my views on that. And then we look at the VIX. VIX just spiking up, headed back to that not good for trading territory. And by the way, this is all kind of like a vector, okay? It doesn't really matter where you are on this chart. If you're pushing up, it's not good. If you're pushing down, it's good. It's good trading. If you're pushing down, trading should be good for the long position. If you're pushing up, it should be bad for your long positions. And then, of course, if you're just consolidating in a region, then this is not good. And this is good. Okay. So basically, like that. You can see we're just in the middle. Nothing terrible is happening, but we are pushing up dramatically. And so that makes it bad for trading any long position. And then same thing with the DXY. People wanted a double top here, but look, it was just retesting the breakout of this curve. And what I mentioned is that usually when you break out from a curve, you test higher than the high that you put in before the breakdown. And so again, like what I said, it could be 110, it could be 112, it could be 114 before this thing has a check back. And we're just waiting to see what happens in the coming week. But most likely, this thing is putting in kind of like a temporary topping structure. It'll have some type of pullback somehow, and then perhaps continue to go maybe in 2023 wherever it tops out. It's gonna have a pullback, and then it'll probably continue to go again. Okay, guys, like this thing's probably not stopping until it goes to Valhalla. Okay, so bullish on the dollar, guys, bullish on the dollar. But that doesn't mean that it can't have temporary toppy formations. And I don't think it's topped right now. As I mentioned a couple episodes, it should push up higher. But you know, even if it just consolidated in this area, that's not great. That's not great. Okay. USDT continuing to go higher does seem to be reaching a little bit of that. Not sure why I had my red line there. It should obviously be at the top of this wick and at the top of this structure. So we are just kind of, getting into this resistant area here. Could we have a little bit of a pullback? Yeah, definitely. We could have a little bit of a pullback. Yeah, and this was right here, and right here, right here, right here, right here, right here. So that was that area. There we go. Not sure why that was off. And then this one, yep, this area right here, right here, right here, right here, right here. That's why we got this diagonal. So you see, we could do a similar type of diagonal up here that I was mentioning that we were likely to do down here. And so if we did have a couple days of good trading in the coming week, maybe towards the end of next week or maybe mid next week, that wouldn't be unreasonable. We just have to see where does the stock market bottom first. The stock market has to bottom before crypto can really go for a run, okay? Or at least the stock market has to find some support. And so nothing too much in our favor. This is still pretty bullish. Don't even really need to mention. But if we put on our EMAs, you can see it's just riding very high, right? It's riding above the 4 EMA even. And so it could easily come back to the 9 EMA, which would be at support. So that's perfectly reasonable. And if we did have some good trading days, um, that would just be logical based upon the technical analysis of the USDT dominance. Um, Assuming that the VIX also has a pullback and the DXY either goes sideways or has a little bit of a pullback, because both of those things could kind of just resist. It could just resist. And if stocks continue to just plummet, right? The reason I look at the Nasdaq 100 is because it is tech heavy, and if a stocks just continue to plummet, wow, this thing even broke its 50 MA. Okay, but it does have a little gap here that probably will get filled eventually. So this thing is most likely to come back up at least at some point it will. But you can see there's most likely to be a push down and then a pump up. Guys, I'm really not feeling well today, so I'm starting to lose my train of thought. But just wanted to update you guys. And also, congratulations, guys, if you resisted the temptation. If you guys resisted the temptation to just FOMO the last couple days, which a lot of YouTubers, a lot of Twitter handlers, a lot of Twitter handles, a lot of gurus, and a lot of pump and dump group leaders, they're trying to get everybody to like FOMO into things. I was telling you guys, like these formations don't look good, and while we can have some type of pumps, I just kind of wiggled this diagonal a little bit because it's a zone, right? It's a zone. And if you look at it just, more, in more detail, it does kind of look like we fell to that diagonal. We bounced off of it. We kind of reached a bit of resistance, right? This previous support, we made support here, but now it's become resistance again, right? And so we've basically turned this area right here back into resistance. And so we got dropped down, and then we broke through our diagonal support. We're catching the top of this area as support. We tried to push back up through the diagonal. We totally failed. And so we're just sitting on top of this support that I have outlined here, right? And so these zones have been holding up extremely well. This has been extremely good trading for Kadena. That diagonal was off just a little bit, but if we look at like a Zilliqa, you can see a very similar thing happened. We had a diagonal here, broke down. It actually got stopped by the double resistance of the diagonal and this level right here, which has been reconverted, right? Reconverted into resistance. Let's see, what color am I using for that? That one? There we go. And now we just got rejected off of that. And look, we've just broken through the bottom of this one. And while I could consider that this zone is perhaps a little bit deeper, um, because we did get a bounce there. That was also on our diagonal support, and we just don't have diagonal support over here. So this is looking pretty weak for Zilliqa, but we'll see. It depends on how the rest of the chart goes. That's why I was suggesting, guys, don't FOMO into this stuff, okay? Like this was the time for retraces. This is the time to pay the piper. And same thing here. Look on ADA, broke down, reattempted to get on top of that diagonal, failed to get on top of the diagonal, and then what happened? Immediately broke down again. So, guys, KDA, Zilliqa, ADA, basically doing all the same thing there. Let's check up on Ethereum really quick. Of course, I did suggest that Ethereum was going to break down here. We have a little bit of a head and shoulders that could suggest that we could go as low as 12,000. We should have a I don't know what happened to all my drawings. I used to have the CME gaps just lined up for these ones, and for some reason they're disappeared. But yeah, we do have a CME gap on ETH also, so I'll just check that out manually. And we've opened up a new one. Okay, so we closed this one. So I'm just going to, drag this here. We have a new gap here. Do you see how we closed that one? So I wouldn't be surprised if we fill this one too. Just going to turn this one gray because it's been filled. But we still have this one open down here at 13,000, basically 12,000 to 14,000 kind of area. We have that CME gap, which may like to get filled. So eventually it's going to get filled. And, we'll probably also fill this one up, around 1,500, pardon me, 1,200 to 1,400. And then also this one around 1,500. So we'll probably fill these eventually. So there should be a little bit of price action shenanigans going on perhaps this week. Okay, guys. Oh yeah, going back to Ethereum. Yeah, I mean, it's not really, we can't really see that diagonal on this one. I mean, could I mark something? I don't know. Ethereum's just been so bullish. It's just not been behaving like many other coins. So, look, we did catch support in the area where I suggested that we were going to catch support. So we are kind of front running it a little bit. We can see if we go a bit lower. I'm not really going to give too many calls on Ethereum. Just haven't analyzed it the way that I do Bitcoin and some of these other coins. But just wanted to show you that there is this head and shoulders, which does have a measured move down into this area, and what it's leading to $1,200 right now. We do have a CME gap around that that kind of $1,300 level. All right, somewhere in here. Just gonna eyeball that for right now. And so if we did come into this area, it wouldn't be surprising anyway. And then we have these kind of horizontal supports in this area, right? You can kind of see them. I'm just going to eyeball it. You can kind of see this type of support over here. So this measured move actually makes a lot of logical sense. It fills in the CME gap. It also grabs support, okay? And then we also do have we do have some type of diagonal zone here, that could also catch us around that CME gap area, just if it comes to that. We'll be paying attention to this in more detail. I'll try to give some more detail to Ethereum later on, but I just wanted to touch base on it just briefly. Going back to Bitcoin, just to bottom line this, like we totally failed to grab the momentum that we needed to get to the higher levels. So I was saying we needed to grab 21,000. We need to grab 21,500 in order to get our momentum. Let's see if anything has changed basically on this in the last day or so. Now it's basically 20,250, 20,500. So let's just move this down to 20,250-ish and 20,000, just say 600. Now this is the momentum zone that we need to basically grab if we want to continue bullishly, okay? So if we don't get above this area, and pretty decisively, right? Like we have to really hang on to that area, then we're probably going to continue to the downside, or at any rate, our momentum is to the downside, okay? And plus, I've already shown you our volatility, so I don't really need to repeat myself there. All right, guys, that's your alpha for the day. Stay safe. Please check out the Macro Monday video tomorrow. It's going to be a really good one. You got to catch it, okay? Like, really, believe me, you got to catch that one. All right, guys, stay safe and happy trading.